Hello everyone, welcome to Dashsource. Today we are going to see some of the basic financial terms that we use in our daily life, and it's good if you can remember those terms for your easy understanding. The first term is asset. Asset is simply something that earns you money or some value to you. For example, you have a car and you use this car every day to go to your work. Now, without this car, you could have spent hours and hours just for traveling. But with this car, now you have saved your time. So, this car is an asset for you. The next term we are going to see is liability. Liability is quite opposite to asset. Liability is something that costs you some money if you have it. Let's take the very example of same car. Let's say you do not need a car, but now you have purchased a car. Now you have to pay for maintenance, you have to pay for fuel, and you don't need that car for work. So now this car is a liability for you. Next term is financial statement. As the term suggests, financial statement is some kind of document or record which gives a complete idea of finance of a business and the activities of this business company or organization. This statement is used for auditing by government agencies or accountants. It's also help us to file taxation. Now there are lot of parts of financial statement, and usually people read those financial statements before making any transition with a company. Let's say you want to invest in a company or you want to purchase a share of a company. This time you have to study the financial statement. As I mentioned, there are certain parts of financial statements. One is balance sheet, another one is income statement, and then cash flow statement. Let's look at them one by one. As mentioned earlier, financial statements are written records that convey the business activities and the financial performance of a company, whereas the balance sheet provides an overview of assets and liabilities and equity of stakeholders. It gives a basic idea of such things. Let's go to our next term. Income statement. Income statement primarily focuses on company's revenue and expenditure. That means how much money you have earned against how much expense. As the name suggests, income statement is the amount of money that you have earned after subtracting the expense. And cash flow statement is the amount of value that has been transferred in and out of a company. The cash flow statement measures how a company generates cash to pay its debt and to fund its operational expenses. The next term is capital. Capital is simply the wealth. It may be money, it may be property that you have earned or you have owned. Capital is simply means the money and property that a business have. Now come to the next interesting part, that is interest. Interest is a monetary charge for borrowing money. Let's say you have taken 100 rupees from your friend and you have planned to return it by the end of the year. That means for 1 year you will keep the 100 rupees with you, and after 1 year you will return this 100 rupee back to your friend. Now in that case you have to pay certain extra amount to your friend. Let's say you have decided the amount will be 5%. That means you have to pay 105 rupees to your friend in the next year. This extra 5 rupees is the interest on base 100 rupees. Now the interest we have discussed is simple interest. Now there is one more part of simple interest, is called compound interest. In compound interest, you have borrowed 100 rupees from your friend and you have to pay 5% of interest. That means if you return it after 1 year, you have to pay 105 rupees. And in next year if you return, that means after 2 years, then you do not have to pay 110 rupees, that is 5 rupees for each year. But you have to pay more than that, because in first year the interest is 5% on 100 rupees, that is 5%. But in next year you have to pay more than 110 rupees, because the interest is now on 105 rupees instead 100 rupees. So that means compound interest is interest on interest. And the last term of today is inflation. Inflation is nothing but the rise in price in the market. If you have observed that few years back, let's say 10 years back, the goods were cheap, and nowadays goods are costlier. Your salary may be 100 rupees now. Next year your salary will be not 100 rupees but let's say 105 rupees. So the increment of price of goods and services are called inflation. Well, that's it for today. Thank you very much for your time. If you wish to keep these terms with you, you can download this document and print it, and you can keep it for study and learning purpose. To download this document, you can simply DM on the Instagram ID given, or you can simply WhatsApp on this number. I'll directly send this to you. For more updates, you can check out our description section. This is Dipen Sarkar for Dashsource. Thank you.